Hello and welcome to our fifth installment of our Family Monthly webinar series. I'm Tracy Marshall, Division Director of Colorado's Paid Family and Medical Leave Insurance Program. Today, I'm also joined by our Family Policy Manager, Lydia Wologorski, and Lydia and I will be leading today's discussion on how small business owners can prepare their businesses for family. Today, we will explain what FAMLI is, discuss the benefits and protections it will have for Colorado's small businesses, and talk about how FAMLI will be funded. We will also go over private plans, the implementation timeline, outline the steps your business should take to prepare, and cover some of the frequently asked questions that we've heard from employers across the state. Colorado voters passed Proposition 118 in November 2020, which created a paid family and medical leave insurance program for Colorado workers. This initiative had bipartisan support and was approved by 57% of voters, making Colorado the 9th state in the country to establish such a program. There are now 11 states total, with Maryland and Delaware recently passing their own paid family initiatives. At the highest level, FAMLI will provide paid leave for Colorado workers who experience specific life circumstances, which we're going to talk more about here in a moment. The program will cover almost all workers in Colorado, including those who are self-employed or independent contractors, who will also have the opportunity to participate in FAMLI. Beginning on January 1st, 2024, covered Colorado workers will be able to take up to 12 weeks of paid leave in specific situations, including their own serious health condition or that of a family member, caring for a new child, making arrangements ahead of a military deployment, or to deal with the immediate needs and impacts arising from intimate partner violence or sexual assault. As with unemployment insurance, a worker will file a claim for family leave. Those claims will be reviewed prior to approval, and employers will be kept in the loop at every step of the process. We do understand that to some employers, this may feel like yet another thing that will complicate your business, but FAMLI doesn't just benefit your employees. There are tangible benefits for every employer, especially our small businesses. First of all, we're committed to reducing the administrative burden as much as possible. And that's why FAMLI premiums will work in the same way and on the same schedule as the existing unemployment insurance system as much as possible. Employers will only need to register and pay into the premium system. When an employee needs to use family leave, that process will be managed through the state, much like unemployment insurance. Secondly, FAMLI is a cost-effective way for small businesses to provide paid family leave, because Colorado businesses with 9 or fewer employees will not have to pay an employer premium. For those businesses, their only cost will be the administrative overhead to deduct and remit your employees' premiums. Businesses with 10 or more employees will split the premium with their employees, with the employer and employee each paying a premium equivalent to 0.45% of employee wages. Also, if you're currently paying out of pocket to offer maternity leave or other paid family leave, FAMLI may be able to replace those, resulting in a cost saving for your business. Paid family leave is a benefit that workers want. The 2016 Deloitte survey found that 77% of workers said that the availability of paid family leave had some influence on their choice of employer. Colorado's FAMLI program will help make small businesses provide better benefits that some larger employers already do, making them more competitive with those employers for talent nationwide. Many employers are trying to do this anyway, but they're facing the challenge of doing it out of pocket and with the risk of losing an employee. There is a growing body of evidence that access to paid family leave can improve employee morale and productivity. A decade after California introduced paid family leave, 90% of employers surveyed said that paid family leave had either a neutral or a positive impact on employee morale and productivity. Research has shown that employees with access to paid leave are more likely to return to their jobs and remain in the workforce, reducing the cost to find and train replacements. One study conducted by Rutgers Center for Women in Work found that new mothers who take paid leave are 93% more likely to be in the workforce 12 months after childbirth than those that do not. And lastly, FAMLI will provide your business with the flexibility to fill temporary vacancies. When you have an employee that uses FAMLI for maternity leave, you'll have 100% of their wages available to you. You could hire a temp, pay overtime to other employees, or whatever combination makes the most sense for your business. Lydia, could you highlight for us some of the other protections that FAMLI offers for both employers and their employees?
Of course. Thank you, Tracy. Employers will receive 30 days advance notice before an employee takes family leave, if the need for leave is foreseeable. The appeal system includes both administrative and judicial review. FAMLI will have mechanisms in place to prevent and penalize fraud, and the program will have strong oversight, including an annual report to the legislature. And protections for your employees include job protections mandated after 180 days worked for the same employer, a clear prohibition against retaliation, a right to civil action, mandated posted education about the program and its benefits. Now I'll recap how FAMLI is funded. As Tracy mentioned before, employers with 9 or fewer employees will not pay an employer premium and will only have to deduct and remit premiums from their employees on a quarterly basis. An employee's premium will be 0.45% of wages. Employers with 10 or more employees, however, will share in the cost by matching that 0.45% premium. Employers can also choose to cover some or all of the employees' premiums as an added perk. Self-employed individuals may also choose to participate in the program, paying the same 0.45% premium amount. While we believe the state program will be the most efficient and cost-effective way for Colorado employers to offer paid family leave, especially those with 9 or fewer employees, employers will have the option to provide that required paid family leave benefits through an improved private or self-insured plan. Let's dive a little bit deeper into the employer's premium obligation. For employers with 10 or more employees, the minimum premium amount they are required to pay is 0.45% of wages. However, as we just mentioned, employers have the option of paying up to the full premium of 0.9% if they want to relieve their employees from paying the employee's share. This can be used as a recruitment and retention strategy as small businesses look to hire and retain top talent. Whether a private employer decides to pay the minimum 0.45% or chooses to cover the full 0.9% on behalf of its employees, private employers will be required to remit the full 0.9% of wages to the family division every quarter. The percentage you as an employer decide to cover will determine how much you decide to deduct from your employees' paychecks, with the maximum deduction being that 0.45%. Employers with 9 or fewer employees have the same option to cover the 0.45% of the employee share if they would like to offer that as an added bonus for their small teams.
Now I'd like to walk you through some examples. Let's say Mateo here works for a company with 8 total employees. Each bi-weekly pay period, he earns wages totaling $1,200. Beginning on January 1st, Mateo's employer will deduct 0.45% of his wages from his paycheck for family premiums, or $5.40 every 2 weeks. Because Mateo's employer has 9 or fewer employees, his employer is not required to pay an employer premium, though it may choose to pay some or all of Mateo's premium as an employee perk. Continuing this narrative through the lens of Mateo's employer, let's just say all 8 employees at this small business earn around the same amount of wages. If there are 6 bi-weekly pay periods in the quarter, Mateo's employer would deduct and remit a total premium of $32.40 for each employee, for a total quarterly remittance to CDLE of $259.20.
Now let's consider an example of an employee. We'll call her Elise, who works for a company with 10 or more employees. Each bi-weekly pay period, Elise earns wages totaling $1,600 or $1,600. Beginning on January 1, 2023, Elise's employer will deduct 0.45% of her wages from her paycheck for family premiums, or $7.20. Because Elise's employer has 10 or more employees, her employer will also contribute an equal employer premium of $7.20 for a total premium of $14.40 per Elise's paycheck. The employer would also be contributing a 0.45% share of wages for every other employee in addition to Elise. Again, Elise's employer can also choose to pay some or all of Elise's premium share as an added benefit for its employees. Switching gears, let's now delve into those private plan options. As mentioned earlier, as of the date of this presentation, we are in the process of drafting rules around private plans with the goal of publishing these rules in the coming weeks. We encourage all employers to provide comment, either in writing or via the public comment hearings. In order to qualify for an exemption from paid leave benefits through the family division, employers must offer a plan to all employees that provide all of the same rights, protections, and benefits as Colorado's family paid leave program. In order to be approved, a plan must offer at least the same number of weeks of benefits, offer at least the same level of wage replacement for each week of benefits, include no additional requirements or conditions, deduct the same amount from employee paychecks as the state plan, cover all employees through the duration of their employment, and remain compliant with any additional requirements established by the family division. Several insurance companies who already provide private plans in other states have already expressed interest. And again, we anticipate having the rules for private plans adopted within the next few months that would give employers and insurers time to shop for services before the first premium payment is due at the end of the first fiscal quarter. Self-insurance will be a longer application process, as the division will need to vet the financial standing of the company and will require a surety bond.
Thanks, Lydia. So I just wanted to take a moment here to remind employers of the timeline for how FAMLI will roll out over the next couple of years. Earlier this year in January, we completed our first round of rulemaking, thanks to Lydia, a process which will continue this spring. In July, we will begin a multi-year public education campaign to ensure both employers and workers are ready for FAMLI. Later this year, employers will be able to set up accounts in the FAMLI system, and next January, you'll be able to log into those accounts and start remitting premium payments. Premium payments for the first quarter of 2023 will be due on April 1st of next year, and there will be a 30-day grace period. Finally, beginning on January 1st of 2024, covered workers will be able to submit requests for FAMLI leave. Here are 6 steps to consider when preparing your business for Colorado's paid family leave program. First of all, determine how FAMLI will apply to your business. Then estimate your premium liability. You can use the calculator on the FAMLI website, or for multiple employees, use the set formula and the rate to create a spreadsheet that works for your business needs. Begin to familiarize your staff. Detailed guides for employers and workers are on the way, but the employer toolkit on our website includes a break room poster and administrator fact sheet that you can share with your staff now. Talk to HR. Begin incorporating language into your employee manuals regarding premium deductions for this fall, and subsequently adopt clear guidance for employees around family benefits in the fall of 2023. Whether you use a payroll company or process payroll yourself, you will need to plan to deduct family premiums and submit them to the state beginning on January 1st of 2023. Ask questions. We're committed to helping you navigate this new program and ensuring your success.
We've received many questions about FAMLI from Colorado businesses. Here we've highlighted some of the prominent topics and questions, and with Lydia's help, I will quickly review some answers.
Great. Is this optional for the employee and employer?
This is required for most Colorado employees and employers, with the few notable exceptions of self-employed individuals, local government employers and their employees, if their workplace opts out of coverage, and federal employees. Everyone else, including domestic workers, clergy, nonprofit organizations, will be required to comply with the premium payments and could be eligible to apply for benefits.
Great. Can you take this leave intermittently?
Yes, this can be used for intermittent time off.
Does the employee apply directly to the government?
Similar to unemployment insurance, an employee will apply to the FAMLI program for benefits. The program will determine eligibility based on submitted documentation and then issue payment directly to the employee.
Great. Are premium and benefits payments taxable?
Wages will remain taxable in Colorado. The premiums and benefit payments are exempt from state taxes. The federal IRS has yet to issue guidance regarding federal tax treatment of premiums and benefits from state PFML programs. We anticipate the division, we anticipate the division will be able to issue 1099 tax forms, and we encourage you to work with your tax advisors for additional information.
Absolutely. Will there be an administrative cost to opt out and use a private plan or self-insurance?
We may charge a fee as part of the opt-out process to determine whether or not the division can accept a private plan. There may also be costs associated with any appeal processes or audits. Details of these costs are still being worked out as part of the rulemaking process.
Great. And will an unlimited PTO or paid time off policy qualify as an acceptable plan to qualify for an exemption?
Private plans have to provide equivalent or better in benefits and protections, and an unlimited PTO plan that the employer has discretion whether or not to authorize the PTO usage based on business or scheduling needs would not be equivalent.
Here are some of the most popular questions around employee benefits of the program. Will we be notified if an employee applies for FAMLI?
Yes, employers will be notified when an employee applies for leave and will also have the opportunity to provide the division with information. The division will also have other fraud measures in place.
Great. How much leave can an employee take?
A family leave is different from paid sick days and will require documentation of need before the benefit is approved by the family division. Depending on the reason and the need for leave, the benefit leave period may be up to 12 weeks. For people experiencing pregnancy and childbirth complications, this may be extended an additional 4 weeks for a total of 16 weeks. The family benefit can only be taken once a year across a rolling annual calendar. For example, if an employee takes paternity leave on February 11th, 2024 for the full 12 weeks, they would not be eligible for any other family leave period until February 11th of 2025.
If there's no money in the individual's fund, does it stop paying out?
No. The benefit amount is paid from the family fund as a social insurance pool. The money is not solely reserved for an individual like it would be in a health savings account or other specific savings account would operate.
Great. Here are some of the most popular questions around premiums of the program. How do employers report their wages and remit their premium payments?
Employers need to submit to the Colorado Department of Labor and Employment both their share, if it's required, and their employees' share of the premium through an online system at the end of each quarter, along with their quarterly wage data. These quarterly filings should be similar to how most companies submit their unemployment insurance today. Employers will need to register with our online employer services portal that we're currently building out. The technology will be ready for employers to register in the fourth quarter of 2022.
And will this be a separate filing or filed with unemployment taxes?
This will be a separate filing. However, as we are working to design and build the technology platform that will streamline a process as much as possible so that when an employer logs in to pay one premium, they can also pay the other to save time and effort. We are working to build a family program that is fair and meets the needs of both employers and workers. You can help us by participating in our webinar series, sharing with us your ideas and concerns, and inviting us to speak to other business groups and organizations. Additionally, you can visit our website at family.colorado.gov for updates and share your feedback with us via email. You can also now follow us on social media at Colorado Family. Our next webinar will be held on Thursday, June 30th, and will focus on calculating family premiums. The June webinar will be a live broadcast and will include a live question and answer session. The link to register for the June webinar will be shared on our website, in our email newsletter, and through our social media channels. That concludes today's webinar on preparing small businesses for family. We certainly hope you have found today's webinar informative and encourage you to contact us with any feedback or questions that we were not able to answer for you today. Thank you so much for watching, and thanks to Lydia for being with me today. We'll see you next month.
Thank you.